Thank you everybody for tuning in today at noon Eastern here in the US. From wherever you are across the globe. I know that last week was Climate Week, and we, as an officially sanctioned Climate Week event, are extending that into this week. So thank you for joining us today. We have a wonderful panel today of incredible entrepreneurs and innovators around community scale finance and technology. And the theme of this Climate Week is getting it done. And so we're going to hear from them on how they're getting it done. But I want to start by kind of backing up and giving you a sense of what Raise Green is and why we feel as though community level finance is so important. So our mission at Raise Green is to get everyone involved in climate solutions. And that mission is getting more pressing by the day. So whether it's the devastation that we've seen from Hurricane Ida, record-shattering temperatures in the northwest of the US, 121 degree temps in British Columbia, or the largest wildfires in history in the US, or if you're in Germany, the floods, central China, the crop losses and floods, the list goes on, and the parade of horribles is becoming more and more pressing by the day. And we know that we have to do something about that. And there's also a great reason for hope, though, despite the despair that we're seeing. And that is that in the first half of 2020 alone, we saw around 16 billion invested into climate tech companies. So that's up 50% from the year before. The green bond market has surpassed $1 trillion earlier this year as well. And so capital is starting to flow in the right direction, and the rhetoric is changing. So we heard last week from many large financial institutions making new commitments on the race to zero and the race to resilience that the UN Framework Convention team is leading. But there are still too many pretenders out there, those that are trying to capitalize on this change in public sentiment by greenwashing their funds. And we're still only about 1/6 of the way toward the $3 trillion annually that experts say is needed to get us to 1.5 degrees to stay alive, or even 2 degrees Celsius below pre-industrial levels. So at Raise Green, we see millions marching in the streets for climate action. We ask the question, what do you do at the end of the march? Do you call your congressman and ask to pass the budget reconciliation? That might be a good thing to do this week. Do you, vote your shares as a shareholder from oil and gas companies? That might also be a good thing to do, but what more can you do? And we know that real change requires verifiable impact investments that go into projects with demonstrable social and environmental benefits. And we all have a role to play in making that happen. We know the impacts are being felt first and worst by communities that are historically underinvested in, under-resourced, and we aim to make it easy for anyone to invest as little as $100 into climate solutions, to democratize the impact investing space and make it possible for everyone to have a piece of the clean energy transition. So we're, along with this public awareness that's shifting, we're seeing now that there's been a doubling in the amount of folks that are alarmed about climate change, just from 2015 to 2020. But we still need more. We still need more to happen. And this year, we have seen a burgeoning growth in also the crowdfunding space. So in 2016, rather prior to 2016, only the top 10% of Americans were allowed to invest in private companies. And technically that changed in 2016 with the finalization of regulation crowdfunding and the crowdfunding rules that make it possible for everyday Americans to invest into startups. And Crowdfunding globally is about a $30 billion industry. And within the US, but the point is that most of that is donation based. And within the US, it's only been possible to invest in crowdfunding over the last few years from 2016. So that's important because 90% of Americans are not rich or accredited investors. And so they've been barred from making these types of private investments. And their net worth is over $17 trillion. So they showed us with the sort of meme stock saga that some of you may have watched, that they can really, pack a punch, and retail investors want to get into picking their own investment opportunities. 95% of millennials, in fact, believe that they can have an impact with their dollars and want to put those into climate-related sustainable investments. So that's the scene, and we're going to get into a discussion about all of that. But without further ado, I want to have the distinct pleasure of getting to introduce and welcome some of the early adopters of applying these principles of inclusive finance to climate startups and climate solutions. And we're excited to discuss all of that today. So we're going to start with Elizabeth Klandos. Elizabeth Klandos is the co-founder and CEO of Ola Filter Corp, and they are working to end water poverty in the developing world with her co-founders, Teresa Smith and Monica Goforth. So Elizabeth, welcome to the stage. Over to you to share how Ola is getting it done on climate and social issues.
All right, thank you, Franz. So yeah, that was the overview introduction. We're Ola Filter, and we've created an ultra affordable water filter made specifically for low to middle income households in developing countries. It fits their budget and their usage context. And while we were working in developing countries, we saw this very large unmet market opportunity and global demand, that there was no sustainable recourse for the vast majority of the world to meet their daily water needs. And so our approach to climate action is twofold: mitigation and resilience. And we kind of view ourselves as the low-hanging fruit of mitigation, and we're fine with that. Because the majority of the world, they boil their water with increasingly scarce firewood, or they get their water jug by jug, plastic bottle by plastic bottle. And so in order to make a sustainable, scalable solution to this problem of deforestation and plastic waste, we've created the Ola filter. This is a little prototype of our filter right here. And then we also have been thinking about this in terms of resilience. I apologize for the background noise. It's very loud. So we've also been thinking of this in terms of resilience, because we know that water scarcity is a problem. And so we want to create a context in which low-income people in developing countries can drink the water they already have access to. That's tapped water that's already tapped into their homes. It's just full of parasites and diseases. So that's why they're buying and purchasing water. And so there's also the reality, the unfortunate reality, that we already have climate refugees. And that is an increasing reality. And so we're creating product developments so that our filter can be used in disaster and displacement contexts as well. I think that's the overview. I'll hand it over to you, Franz.
Fabulous. Well, great to have you on, Elizabeth, and good to see the bustling family life in the background. I think we're all very familiar with working remotely, so such is life these days. But proud to also move on and introduce now our second panelist and presenter, Cullen Kosunik. Cullen is the Chief Financial Officer for Block Power LLC, and also the managing member of Block Power Energy Services 3 LLC. And he's got the sun on his face here. So Cullen, welcome to the stage. And can you fill us in on how Block Power is getting it done on climate and inclusivity.
Sure, thanks, Franz. So Block Power is a Brooklyn-based energy efficiency startup. We make buildings greener, healthier, and smarter. So really not just focused on energy efficiency, but a sort of a whole building solution to climate and health needs. We built a platform that allows us to evaluate the needs of buildings remotely, so that through the pandemic, this has been valuable. We can take a look at a building from a single family home to a multifamily apartment building to a small commercial building or a house of worship, and understand its energy need, understand possible code violations and health issues that may be occurring there, and resolve them. We work a lot in low and moderate income communities, and that's we've raised some funding on the Raise Green platform to serve that, and really all the building owners in America. We've been focused in the Northeast in California to date, but nationwide, there's probably a $500 billion market opportunity to upgrade these buildings. These buildings are, a major contributor to greenhouse gas emissions. By some estimates, 40% of American greenhouse gas emissions come from the building stock. And so the infrastructure is outdated and unhealthy, and there's way too many parties that need to come together to really make all of these repairs necessary. So what we do as Block Power is we're the central group that pulls it all together, right? The engineers, the construction contractors, the finance providers, the lenders, utilities, and governments. And so we've done this with our assessment technology. We've built a no money down financing platform. That's what the funding that we've raised on the Raise Green platform has gone to support, direct investment into upgrading buildings. And we've built a lot of partnerships with utilities, municipalities, and other organizations. We make money both from enterprise and projects, though. So it's really the building owners that are the most important thing. And that's how we're really getting it done, is by getting out there into the community, getting the support of the state, the municipality, the utility, and then helping the building owners themselves upgrade their buildings.
Excellent. Great overview of Block Power's incredible work, Cullen. Thank you. And on to our last introduction to the panel here. A recognized innovator and energy efficiency finance veteran for over 2 decades, Peter Kreista is the co-chair and founder of the National Energy Improvement Fund. So Peter, how are you all getting it done?
Thanks, Franz. I think we're so excited to be on this platform with really innovators like Elizabeth and Colin, and we have focused more on the prosaic kind of approach to this thing, that people have to make their improvements in their homes, regardless of their grand plans. Like, people have to focus on energy efficiency and everything else. So I think we have done a great job of focusing on helping people maintain that and increase that whole program. So we focus, National Energy Improvement Fund focuses on essential energy improvement, like heating, cooling, lighting, all those things. So we do all these things, and the idea is that the improvements that we can focus on with the Raise Green platform is supporting those kind of improvements across the board. And it's been a great partnership with Franz and Matt and the entire Raise Green platform, because people have to, they think about energy efficiency and solar and renewable, but in fact, it's all about what can impact their bottom line as a homeowner right now. So we have done this stuff that can help people do these things right now in America. And it's all about creating a essential energy improvement thing for them. So Franz, we are happy to be with you, and we will talk more about this later.
Wonderful. Thank you, Peter. And so one thing that I think comes out as you listen to Elizabeth and Cullen and Peter share what their businesses are is that they're all attacking the climate challenge from different angles, but all from an angle that involves providing solutions to those that perhaps haven't had them before, and are also the most in need of those, whether it's residents or commercial buildings, individuals in the developing world needing access to clean water, or low to moderate income families in working to improve their efficiency and the health of their buildings and HVAC systems. So we're very clearly reaching across many different walks of life, and so my question for you, sorry for the big wind up there, but is basically why crowdfunding? Why have you chosen to go with crowdfunding as a way to supplement the work that you're doing? And I'll turn first to Elizabeth with that.
All right, great. So we chose crowdfunding to go from ideation to product. That's what I'm in Guatemala right now, because we're at the product phase finally because of the crowdfunding campaign that we did over the summer. We are a hardware solution for low-income families in emerging markets. That is a hard sell to VCs, and we understood that. So crowdfunding was a great way to essentially aggregate friends and family, and then with all the cross-pollination that happened with Raise Green as well, to expand our networks and to get us from a pitch deck and a CAD design to actually being in country and creating our headquarters. And that was the tipping point was crowdfunding. And I think that was because there's so many people that want to act on this. It's not difficult to explain the problem, and especially, even in the global South, like people understand the problems that are happening in the global South, and it gives people an opportunity, like you said, not just the 10% because of the regulation changes, but it gives people an opportunity to be part of that growth and to be part of this world-changing movement that's happening at this moment. So that's why we chose it, and it was a fantastic choice for us.
Excellent. Cullen, Peter, why crowdfunding?
Well, Franz, I will speak. So we have done private offerings before. My daughter asked me, who's like a 30-year-old daughter, and said, "Daddy, how can I invest in your company?" I said, "Well, you can't with like $1,000." So, Franz and Matt and the whole team helped us create that platform to invest for like the small investor that wants to invest in mission-based investment. So I think it's a fantastic thing. And, I use my daughter as the shining example of who, the 30-year-old person who wants to invest in great things that can have great impact on climate change, as well as get a yield on their investment. So that's why we're here.
That is a common occurrence, I think, of the youth reminding us why the climate work is so important.
Yeah.
So good to hear. Cullen, to you.
Yeah, I mean, we started into this because we realized that crowdfunding, we were looking at a lot of different funding sources. We had some boutique funding sources that had funded solar and other creative energy projects. We looked at banks, we looked at private equity groups. And ultimately, we wound up going down the road with some of them and setting up facilities with some of them. But we said, wow, crowdfunding can probably give us a pretty good cost of capital, right? So looking at it purely on a dollars and cents basis for building projects that will be low cost to the building owners and to the community, crowdfunding can do that. And so that inspired us. But as we dug in more, we found out really, and we also did know that really getting into the community and raising from the community is something that we wanted to do. I mean, that was a foundational aspect of Block Power as a whole, but that was even before my time. But as we looked into crowdfunding again, when I joined, it was really that understanding that we can get into the community. We are building these building upgrades in the community. We should be raising funds from the communities that we're in. And we wound up getting money from across the country, right? And we're not active in all of those all of those areas where we've raised money yet, but we have been able to get a lot of support from folks in the areas where we are active, the Northeast, California, and the upper Midwest. And that was a large part of our base, I think. And even if one person's investing in another person's community, it's still the same feeling of, we're all one here, right? And so that's really important to us. And I think it's important to the mission of what we're doing. And then finally, the one that sort of snuck up on us, but I think is really important is, when we're crowdfunding, a lot of these folks can be our customers too, right? Or they can have friends or relatives who are our customers. And so we're out there, invest in your community, but also invest in your building and get to know us and get behind us, and we can come and help you too. So, I mean, all of these come together to make a real valuable mix.
Yeah, I think that Franz and Matt have created this platform that whether you're into the, really deeply climate change kind of stuff or more prosaic stuff that we finance, that they have created a platform for small investors to come into. So that's the really cool thing that what they've done. So I think it's a really exciting stuff that you've done.
Oh, well, thank you, Peter and Colin and Elizabeth. Good insight. And it's clear also that it's for different reasons that each of your businesses opted for it. So that's, I think, very fascinating to hear and to understand the motivations. In the large scheme of things, however, crowdfunding thus far, even if it is $1 billion this year, is still just a sliver of the investing landscape out there. I mean, we're seeing commitments of $7.5 trillion being poured into climate solutions from Goldman Sachs, for example, between now and 2030. And actually, Goldman Sachs is one of the investors, I think, in one of your companies. But
that's right, they are.
So within this larger landscape, and when we're thinking about the climate challenge, how does it contribute to the investing community? What role does crowdfunding play within that broader picture? And I think, Elizabeth, you touched on some of this from a venture standpoint, but I'm also curious to hear in the project finance realm as well.
Yeah.
Well, I think it's no small task for Raise Green to have navigated all of the U.S. national and state regulations to create a platform so that we can do this. And it was really great for us to enter into this where crowdfunding isn't terribly new. People are aware of Kickstarter and GoFundMe. And then there are different crowdfunding platforms, pardon me, but what we really like to do was be in good company with other like-minded, mission-aligned organizations like Colin's and Peter's. And so that was really beyond the incredible value that Raise Green gave us everywhere from legal and marketing advice, but to be with in that ecosystem with other entrepreneurs is really important.
Yeah.
Awesome. And yeah, for the record, we don't provide marketing or we don't provide legal or financial or tax advice as the portal, but we do provide a sort of support by the way of template legal documents and guidance on structuring to help out. But Colin, you want to reflect on what role crowdfunding plays in the larger financing landscape?
Yeah, I mean, there's a lot of money out there that goes into investing into climate, more and more, but still it leaves a lot on the sidelines. There's a lot of folks in the communities, there's a lot of folks across the country, across the world that care about climate change, that want to do something about it. And frankly, just your shopping habits alone are not going to, they might move the needle a little, but it's what the world does, right? It's what industry does. It's how things are built. And investment has a way to influence all of that. And crowdfunding opens this up so that people can get to vote with their dollars. I hate to say it, but sometimes that's how how change happens is through investing and through creating and through making things. And so crowdfunding enables everybody to do that, right? It enables folks who care about climate change to actually put their money where their mouth is and make an investment in something that they think will help. And so I think that's really important.
Powerful. Peter, do you have thoughts on that? You've been in the
Well,
finance
it's interesting
world for
because
quite a
people,
while.
I see some Q&As here on the thing about, there's two kinds of investments. There's equity investment. I'm going to invest in this company and I hope it all really plays out for me in some great thing. We have focused more on like, I'm just going to pay you a guaranteed yield and like a CD almost. And you will know that investment goes toward great stuff. So I think people have to look at most of those investment opportunities as the same thing. Do I want to invest in a company with upside potential in an equity investment that I might make more money with my sustainable investment, or do I want to get a yield and just do good things? So I think you have those two concepts here, and yeah, so I think that's the idea. And our investment in climate action notes with NEIF are all based on here's the guaranteed yield, doing a good thing, but not a lot of great upside. So that's the difference between perhaps some of the other things that you might have on your platform.
Great, and I'm going to keep peppering in small disclosures here and there since we're we're a regulated portal, but none of the panelists today actually have live securities offerings, so nothing here is an offer of securities at the moment. Just to remind folks, but I know also that several of the people on the line, because I recognize some of the names here, are folks that are actually considering using crowdfunding in their capital stack. Whether they're doing a community scale microgrid and looking for tax equity, or they're and looking for sponsor investment, or they are also starting a venture and looking for those first dollars in. So I want to do a quick roundabout on what are some of the lessons that you learned from doing your raise that might be transferable to others. Why don't we start with Peter this time, and we'll go in reverse order.
Well, I think the lesson we learned is that Franz and Jackie and Laura and the team and Matt are fantastic partners in this stuff. That's what we've learned, is that they are mission-based. Yep. They understand what we're trying to do, and they will help you through this whole thing. So that's the number one thing. That's crowdfunding is a broad-based kind of thing, but when you talk about crowdfunding in a very specific engagement like we're talking about here, you need to have people that get what you're doing, and Franz and his team have done that. So that's my biggest takeaway from all this, is that we talk through a lot of nuances, but we can get it all figured out. So Franz, that's my biggest takeaway, is that you guys are focused on doing the right stuff and regulatory compliance. I'm a regulatory compliance guy. I am so big into this, and you and I and Matt and Jackie and Laura are all into this. So if you're concerned about your regulatory compliance stuff with Raise Green, don't be, because they are into this as much as you are. They will make sure it gets done right. And it's really, really critical. So really important.
Well, I promised I didn't tee him up for that. But,
I mean, I'll echo it too, though. The Raise Green platform and folks were able to hold our hand through the whole thing. And, not speaking about that specifically, but when you look for a platform, it is important to think about where you are and where you want to go and what you know about crowdfunding. Raise Green folks here, they know a lot about how to get everything done and to walk through the process. They really helped us a lot and really handheld us through the process, and it would have taken a lot longer without it. And so it's something to really think about. I can put some, other lessons learned. Really, this is a community engagement program, right? So you need to engage with your community. You want to build up your social media presences beforehand. So this can really be on any of platforms, right? We posted up on Instagram as well and got some leads and feedback in through Instagram. I think our most successful was on LinkedIn, actually, but it really came a lot with a good video. The video cannot be understated. A good video goes so far, and then getting that good video out to folks who are going to share it goes so far. Even if you don't have a big network right now, don't worry about that. You can get a big network if you have a good video and you have a couple good posts and you're diligent on this. I mean, we had a cadence where we would post certain things. We pre-wrote a bunch of our posts ahead of time, and we tried to time those. And then Raise Green has some of their own posts that they do generally just to promote the platform there. They can where they can include some of the offerings in there too. So just think about who your community is. Think about how you want to engage them. Maybe social media is not the best way. A lot of value we got came through other press and other things that we were just doing that got people to come to the website, or got people to go to a news article that had people come to learn more about what we were doing in crowdfunding. So if you're just out there getting some attention and getting some action, I think that's that's an important part of being able to fill up the funding quickly. I mean, we in our raise filled our $1 million max in just over half the time we set out for ourselves. So it can happen pretty quickly, but you've got to be out there and engaging with folks.
Excellent book of tips and tricks there, Colin and Peter. And Elizabeth, do you have some that you want to share as well?
I agree with Colin. We followed all of your advice. You gave us a good heads up. Not advice. We followed the template. Pardon me. And we did the posts, and we really marketed it. And the thing was, because we were such a small company, we're at seed stage, we're only a couple months old when we approached you. And so it was really great to sort of shore up our business model in tandem with working on the Form C, because Jackie and Matt and Franz were able to ask us really difficult questions. And it was wonderful to use your experience as a sounding board and to grow our company in tandem with the beginning of the crowdfunding raise. And in that same way, we were able to grow our network. We did rely pretty heavily on LinkedIn, and we were finding as we were continuing to market, again, we did the video, we did all the things that you had suggested, and then also the value added of the sharing that you guys did in the podcast. It was really great in the Investor Day. So it was really interesting for us, because I feel like as we were building our foundation, we were doing that with you guys. So it's really helpful.
Fabulous. Nothing like working together to get things done. Well, good reflections. I think we have a number of folks now that are starting to ask questions. And as a reminder, please do feel free to put your questions into the queue. Antoine is helping us to facilitate those. Yes. Antoine, why don't we go to our first question from the crowd?
Sure thing. I think you all touched on it, but one of our viewers asked about the keys to success best practices to market and drive investors to the Raise Green platform. You talked about it in your last answers pretty well, but I wanted to just find out whether any other things in addition to what you mentioned that you thought was that were really important to share with our audience. Again, building up your network, leveraging some of the social media platforms. Was there anything else anyone wanted to add? I also heard from Colin as well the value of the video. Did anyone want to? Were there any other tips or tricks, Peter, Elizabeth, that you wanted to add or underscore?
Specific marketing tips that you might want to share.
Well, actually, I watched the Block Power video and how strong that was, and we are actually trying to emulate that for our next offering, because I saw the story part of this being the really big thing. And you can have yield, you can have investment, but the story is so important. So the block power video was very compelling to us. So we are trying to emulate that in our offering.
Well, thank you. I think we want to learn a lot from you as well, Peter, in terms of how to tell a block by block story about what we can provide and what we can do. There's a lot there. I think as far as
I mean, you have to really think about this. Like, you can tell a great story, and you can tell like, hey, I'm going to invest in like equity, but like some people just want to get yield, right? Like, so that you guys have done this. Like, it's like, great, pay me 5%, and like I'll do a good thing, and so it's this whole concept of, and this is the big differentiation that we've learned with working with Franz and Matt, is like, okay, well, who is the audience, right? Who's the audience? Yeah. What do they want to do? Some people are extremely motivated by mission, and some people are motivated by yield, and some people want to have mission and yield combined, right? Yeah. So, what is that, right? So you have to figure this out yourself.
Yep. And if you're doing an equity investment, then you have to figure out, well, what is your upside, and can you sell that upside? And is it a vision? Is it an actual dollar value upside that people can look at as a sort of an exit? As far as promoting, though, I think the other thing that promoted well was emails. We were able to email a lot of our just newsletter folks, right? People who we've known for a while, and we said, hey, we're releasing this. You've expressed interest in block power over time. We're going out and doing a crowdfunding. Here's why. We were also able to tap our traditional investors and say, explain to them and help them understand why we're doing crowdfunding, and get them to help as well, right? And some of our traditional investors have referred in some of our, not a lot of our total dollar, but a couple of our big investments came through folks who were part of either our angel network or our traditional VC network. I think that's all helpful.
I also think that Raise Green has established its own network of people that are interested in investing in Raise Green stuff. And I think that's really important that when they announce these investments, that's a really important thing to all of us that can benefit from that.
Yeah. The Raise Green platform has a lot of focused investors, right? You might look at another platform and see, oh, there's all these investors. The Raise Green investors invest in this stuff, and they're very active. That's what we saw.
Awesome. Well, good reflections there. I want to move to a question I saw here in the queue. Colin, you mentioned cost of capital.
Yes.
And actually setting your own terms around the cost of capital. So building off of that, for any of the panelists, really, have there been projects that wouldn't have been possible for you without using regulation crowdfunding as the way to raise your money?
I can jump in on this quickly. The other answer from before as to why we did crowdfunding is it also gave us more flexible capital. And we've got maybe 20 single family or 1, 2, 3, or 2, 3, and 4 family homes that we were able to do both in the Northeast and in California, and a project in Oregon and a project in Vermont that we could not have done without the crowdfunding money, right? Both from a cost of capital, but even more than that, just from a flexibility standpoint, where we're able to go and look at a different credit type than we had traditionally worked with, look at a different geography than we had traditionally gone to. And it's actually helped us to open up the California market because, 5 projects in the Oakland area to low income families are being funded through crowdfunding right now that, we would not have been able to do at all with any of our other funding sources.
Yeah, we just did a press event 2 days ago in Philadelphia, where we're doing low income solar and moderate income solar to a giant program with the Philadelphia Energy Authority and Solarize Philadelphia all funded by Raise Green kind of investment. So it's all really connected and really good. So good stuff.
Yep.
Awesome.
Awesome.
Elizabeth, any reflections on cost of capital or whether what you were working toward would be possible?
Maybe how it compares to other seed or VC investing.
And I think
Elizabeth
we've been joined by
off
Teresa.
the call, so I'll just jump in real quick instead. But I guess
Go
I'll
ahead.
just maybe just build on what she had said earlier about this topic, because for us, being such an early stage company, there were a lot of options that weren't really available to us. Even like, traditional sources like banks, and then your normal big investments like your VCs, your angel investors, being pre-product, it was a really difficult sell for us at this point, especially given while we knew that there was a really strong market opportunity, it's difficult to find the like the references and like the other projects that are in our space to prove that this opportunity has feet. And so having crowdfunding as an opportunity for like our first funding round was really pivotal for us, because we were able to raise enough money to get to market. Like we made enough in this first round that we will be able to build our product and enter the market. And at that point, we won't just be a pre-revenue seed company later on. Like for the next funding round, we will have a completely different story. We will be a product and market, and we did that because of crowdfunding.
Wow, really moving the ball.
That's great.
And it sounds like Elizabeth's internet got in the way, but luckily Teresa's here to swoop in and speak on behalf of Ola Filter, their COO. So good to have you on, Teresa. I want to jump to this question that Steve asked in the chat. He said, can you explain to a novice investor who invests $1,000 into a company, how do they get paid back? Is it yearly? And does the original investment of $1,000 get paid back by interest payments over 5, 10, 20 years, and the original investment of $1,000 returned after 20 years? So some questions around terms and what that looks like. Anyone want to take that?
It seems like that's going to be really variable depending on the specific raise. I mean, everyone has, like each raise is going to list out what those terms are and what your options are for pulling money back out of your investment. Ours was a more traditional startup route, not like a debt equity. So ours was more of a true equity, or like a future equity. It was a safe. We offered a safe with ours, and so that is the type of equity that would, it would convert into shares at a conversion event, and then you would cash out at your normal, like, a sale of a company, or there's different events, but it's all going to be tied into whatever, like each race is going to have their own rules. So I guess you just have to be careful.
Ours was 12 years, fully amortizing payback. So just like a mortgage, give us the capital, we'd take it, pay back the money with interest over 12 years. So you get paid back. There would be no lump sum. It would just always be principal and interest payment coming to the crowdfunding investor.
We learned actually a lot about it from Cullen. So our initial offering was a interest-only investment that will pay you back at the end. And then Block Power came out with a amortizing investment that we are going to try to replicate with our new investment in the stuff we do. So I think you have to just identify the market.
There's advantages of each.
You're right. It's I don't think investors in the small world that we're living in, it's kind of critical, but not critical. It's like, I'm going to invest $1,000 to $5,000, like whatever that is, some small amount. And either one works fine. So you just have to be, it's all about these people are doing this because, hey, I can do this in my bank, but wait, I can do this with Raise Green and get all this social and green benefit of the stuff I'm doing, the emission-based stuff. And that's really the key. And yield is critical, but not as critical as the stuff they're investing in to accomplish the mission that they're trying to do. And I think that's what the whole idea of the crowdfunding platform and what Raise Green has decided is that you can invest small amounts of money and make an impact. That's the whole key. That's the differential right here.
Yep.
It's not just yield, it's everything about the whole concept.
Yeah, it's more yield plus more impact, or maybe as you said, Peter, more impact plus more yield.
Yeah, I think it's more impact
if
plus
you're
more
if you're on the yield side.
That's it. It's
Yep.
impact with yield. Oh, that's great.
Come for the
Make
impact, stay for the yield.
Yeah, right. Exactly.
Yeah, but no, and I think it's interesting. I mean, what we looked at as a benchmarking comparison are the somewhat dwindling peer-to-peer lending platforms like Prosper and things like this, where people can, you can go invest and effectively invest in someone's credit card, right? And you don't really know what it is, but they do a whole credit rating on it. You can get the yield there, the same kind of yield that you can get here. Pretty much, it's very similar, but you don't know what the money's going to, and it's sort of anonymous, right? So it's kind of like you can get that same thing, plus now that it's going towards something that you care about and that you're putting your money to something important. And by the way, like platforms like Prosper are also not very easy to use, and they're not super investor friendly anymore.
Yeah, and I will speak as the one gray-haired guy on this panel. I've done this a long time, right? So I've done this a long time with people investing in a similar way in our ventures. And 20 years ago, we shifted our whole business to energy efficiency and lending. And the idea that I can have small investors investing in the stuff that we're doing because of the platform that Franz and Matt provide is so exciting for me. It's like, okay, me, we're a good company. It's all gonna be good. And we have the reinforcement of the Raise Green platform. And we have there's always risk. There's risk, but I'm so into regulatory compliance. I'm so into making sure that things are done right. And the mission-based part of this is so important to me. So I think it's so cool that, God, we're also exposed to investor stupidity and opportunities that people want to do good stuff. But Franz and Matt have created this platform that you can, you got to take a risk. You have to look at all the stuff they have to say, but we're doing the right thing, right? And you're a small investor and you don't have $100,000, but you have $1,000 or $100 or $5,000. And we can do good things. And that's what's really cool about what they've developed. And so for me, it's this confluence of what I want to do and getting out to the general market, because I can tell you that we've done a lot of private capital raising for which is based on high net worth individuals and all that stuff, and that's a whole different kind of thing than going out to the marketplace and saying, hey, we're doing a great thing. So it's very exciting for us to be out there with you on this.
Yeah, well, thank you for that again, Peter. I think to be clear for folks who are listening in, that there's a distinction between doing a private offering to accredited investors only under what's usually a Regulation D offering, and then using a general solicitation, which is a Regulation CF or Regulation A offering, and that allows you to go out to folks who are accredited or non-accredited. I want to get to one question that we have here, and then I also want to say that there are several questions which are very exciting to me to see, because it's folks entertaining this possibility as a result of the information that you all are sharing. But if you do have specific questions about a project that you're working on, please do contact us. Antoine put the link in the chat to do that. We're more than happy to dig in on that, but let's do that individually rather than here on the panel. But the question I want to get to here is one from Catherine. She says, were there stipulations on how you could use the crowdfunded money, or could the money be used to fund any and all of the venture or project's startup costs?
This is again based on how you set things up, right? If you set it up a certain way, it may be more attractive to investors than if you set it up another way. I mean, we thought about, hey, let's just get some money in and we can use it for whatever we want, right? But what we really need the funding for is to build these energy efficiency projects that pay back over time. And structuring the investment to be backed by that is more attractive to investors in our mind, right? And so it tells a more easy to understand story. It's cleaner, and it's lower risk than just saying, hey, give us some money and we're going to do some stuff with it. So if you're talking about an equity raise where you need money to do whatever you need to do to build the company, then that's why it's an equity raise. And so when the company gets big and gets value, then your investment has gotten value. When it's a debt raise like we did and like Peter did, it's, it makes sense to tie it to the project where you can say, okay, here's a thing that we're going to do that's going to make money and it's going to bring in money, and then that money is going to be used to pay off the debt. That's clear, right? So it depends on how you structure your investment.
Good succinct answer there. Yeah, use of proceeds is something that each of these issuers and panelists today set on their own terms and get to lay out to the crowd, and then the crowd gets to evaluate how they want to, whether and how they want to invest. So one last question, and then I want to wrap up so that we end on time here. And this is from Elijah, who says, would you recommend that a novice investor choose a smaller company over a larger company? So getting at some of the considerations from the investor side.
Well, I think most of the companies on your platform are going to be smaller companies, right? So, whether it's, there's no giant company, it's all relative, right? So it's like, we're all essentially smaller companies on your platform doing the right stuff. So I think the novice investor has to evaluate the nature of the investment. I'm going to say all the right compliance stuff here, and just, I don't know. It's not like Google's setting this stuff up on your platform. It's going to be all companies doing really good stuff, like Elizabeth and Teresa's company doing good stuff, and Cullen's company doing good stuff. And you just have to look at it and say, these are guys doing good things. Yeah.
I mean, and not. Oh, go ahead, Colin.
Just say, think about the type of money you have to invest and the type of returns that you're looking for, right? If it's in your mind to invest in a company that potentially has a lot of opportunity to grow and it's an equity investment and you're comfortable with the risk that it would be, then maybe that's the direction to think of. If you're thinking about, well, I want to make sure to get my returns, then think about a debt style investment. But it's, it depends. As a novice investor, it depends on what direction you want to go. Yeah.
But ultimately, crowdfunding is geared to the smaller retail investor.
Absolutely.
That's what it's for. So guess what? If you have $20,000 in your savings account and you want to invest $1,000, that's probably good. But don't invest $20,000 into your, you have to think about this yourself. That's who it's all geared.
It's for the investor to think about. And frankly, if you're going to invest, you can invest in a couple. If you want to see the range of opportunities, it's not necessarily like investing in one. There may be some diversification there, but I mean, this is just our thoughts here, rather than any type of formal advice.
Investment advice. We're not providing investment advice, Colin, right? That's we're not doing.
Not at all.
Appreciate the disclosures. Elizabeth and Teresa, any quick thoughts on that before we do one lightning round and wrap up right on time?
Well, I think that what's great, and about this platform is you can really invest where the impact hits you most. So if it is a developing country context, if it's your community members, I think that that's interesting to see where, on a soft side, what pulls your heart and what you want to invest in as well.
I like that. What pulls your heart? Wonderful. Well, in the last couple minutes, I just want to do a quick round robin here. Much of what we do at Raise Green is designed to give everyone a way to get involved in, whether they're putting in a few $100s, several $100,000 as an institutional or accredited investor into a project or company, or they're actually starting a project or business. And we ultimately want folks to be happy about and proud of taking action on climate change. So I'll start with Peter, and then Colin, and then Teresa and Elizabeth will let you both go here. What's one thing that has you optimistic going into the end of 2021 here?
Well, I think, hopefully the world is settling down, but I have to say, we work with Matt and Franz from the beginning, and I can only tell you that they are so committed to their mission and also pragmatic approach to this whole thing. So if you're an offerer, they are the fantastic guys to get what you want to do. From an investor standpoint, I think, we as NEIF are more on the pragmatic side than the altruistic side. So I think we can provide all those things. So I think, going forward right now, people are just looking for stability and impact. And I think Raise Green can provide that to them. So that's my.
Wonderful. Colin, real quick.
I'm very optimistic with the public sector tailwinds, with the Biden administration, everything, and the national infrastructure bill. At Block Power, we're very close to being able to electrify an entire city, 6,000 buildings, that the city is committing to work with us to do that. And, the New York City stepped forward and done $37 million workforce development program with us. The public sector support and tailwinds for just energy as a whole is huge right now. And I think this can carry the industry and everything into 2022 amazingly.
Awesome. Public sector tailwinds. Teresa.
For me, I think it's this shift towards a global call to action. So there's been, with the climate action movement and with social justice movements, a lot bigger shift toward away from this is how I feel about it, or yes, I'm on board with you doing this. It's more like, what am I going to do about it? Like, if I believe in this, what am I going to do and get out there and do something? And so I think having a place for people to come and invest in projects and missions that they believe in and that support climate action, I think this is a good time to be in this space.
Love it. And last word, Elizabeth, what has you optimistic?
I'm going to say it because I'm in Central America right now. I'm really optimistic that there is a growth in green technology that's happening in the global South. I think it's not just a oh gosh, there I am. Okay, there we go. I don't think it's just a northern thing. I think that we're creating this, and I think that it was in Block Power's video actually where you said we're building back better and we've crossed the Rubicon. And I really do think that that's what's happening, and I think it's happening with the global movement, and I see it here, being in country, that the people are poised. Like, we have good minds on this, and we have good infrastructure. This is the time that we're going to do it. So it feels really good. That's all.
Fabulous. Well, let's get it done. We're all getting it done in our own way. Thank you all for joining today, and really an honor and a pleasure to be with you for this hour. Godspeed and go forth and get it done. Much appreciated. If you want to sign up at raisegreen.com, you can find out about upcoming offerings. We have a simple contact form, and we'll see you out there working on tackling the climate crisis in an inclusive way. So many thanks, everyone.